Hey everyone, welcome back. We're tackling a big question today, one that I'm sure a lot of you have thought about. How much money would you actually need to live comfortably off dividends?
Ooh, yeah.
We're taking a deep dive into a YouTube video by Humphrey Yang. He's a finance expert who breaks down the numbers and helps us figure out if this dream is even possible.
It's a fascinating idea for sure. Financial freedom through passive income, a lot of people talk about it,
Uh-huh.
but turning it into reality, that takes a deeper understanding of all the moving parts.
Yeah, exactly. Yang starts by setting a target, $40,000 a year, for a comfortable lifestyle. Do you think that number is realistic?
Hmm. That's a good starting point, I think. But it really depends on your individual situation,
Right.
your lifestyle, your expenses, your financial goals all factor in. For some people, $40,000 might be plenty, but for others, it could be way too low. It all comes down to understanding what you need and what you want to achieve. Makes sense. It's not one size fits all. So, okay, let's say $40,000 is our baseline. Yang then digs into the concept of dividend yield. That's the percentage return you get annually on your investments. He uses Apple stock as an example. It has a pretty low yield, meaning you would need $6 million invested to hit that $40,000 mark.
Wow. Apple's actually a perfect example here. Because it's such a familiar company to most people, their focus has been on growth and
Yeah.
share buybacks, mostly, not really on showering their investors with dividends.
Right.
So if you're relying solely on Apple dividends to reach $40,000 a year, you need to start with a huge investment.
Yeah, 6 million definitely puts things in perspective. It really highlights how you can't just jump in. You need a strategic approach. Speaking of strategy, Yang brings up dividend aristocrats. These are companies with
What?
a proven track record. They not only pay dividends, but they consistently increase them over time, year after year.
Now, dividend aristocrats, they
Yeah.
could be a really good option. For people focused on income, like take 3M, they've increased their dividend for over 60 years straight.
Wow, that's impressive.
And their current yield is around 4%, which is a lot higher than Apple's. So you need considerably less money up front, invested in 3M, to get that same $40,000 a year.
That's a big difference. It shows how important choosing the right companies is. Yang actually has a table in his video. It shows exactly how much you'd need to invest at different yields to reach that $40,000 target. But he warns against just chasing the highest yields. He brings up AT&T as an example. They have a high yield, but their stock price has been stagnant for years.
Right, that's a classic trade-off companies have to balance. Paying dividends with reinvesting their profits for future growth, often with those high dividend stocks. The companies prioritize those big payouts over reinvestment, which can limit how much their stock price goes up.
So it's not as simple as just looking at the dividend number. You've got to consider the company's growth potential, too. Yang brings us back down to earth, though, with a reality check. He looks at the average net worth of people by age. And even for people in their prime earning years, their average net worth, even invested at a good yield, wouldn't get them $40,000 in passive income.
So what does that mean? For someone who's just starting out with investing, is living off dividends even possible?
Right.
Well, it definitely is, but it requires a long-term approach and a solid strategy. For younger investors especially, it might be better to focus on growth stocks first, stocks that have the potential to increase in value significantly.
So you're saying instead of building that dividend stream right away, it's better to focus on maximizing your capital gains early on.
Exactly, because that allows you to build a larger base. Imagine like a bucket. You want a bigger bucket to collect those dividends later.
I like that analogy.
The bigger the bucket, the more dividends you can potentially get over time.
Right, the more dividends you could hold.
Yeah, exactly. So as that bucket grows, as your investment base grows,
Yeah.
you can gradually shift towards more dividend-focused investments. As you get closer to retirement, Yang mentions Financial Samurai, a really well-known financial expert. He suggests this gradual transition from growth to dividend stocks over time.
That makes sense. It's like adjusting your strategy as you move through different stages of your financial journey, but we can't forget about taxes.
Oh, absolutely. Taxes are huge when it comes to maximizing your passive income. The good news is, qualified dividends, they get favorable tax treatment,
Right.
especially for people in lower income brackets. Yang even mentions some specific income thresholds where those tax rates kick in.
I'm always interested in learning more about how to minimize those taxes. What are some strategies to keep more of our dividend income?
Well, one really powerful strategy is using tax-advantaged accounts, like Roth IRAs.
Okay, yeah, I've heard of those.
With a Roth IRA, you contribute after tax dollars, but then all your earnings grow tax-free. And when you take the money out in retirement, it's also tax-free.
So basically, You get a stream of dividend income with no taxes taken out.
Exactly.
That's pretty amazing. Yang also mentioned traditional IRAs. How do those compare to Roth IRAs for dividend investing?
Good question. With traditional IRAs, you get tax-deferred growth, meaning you don't pay taxes on your earnings. Until retirement, this can be good if you think you'll be in a lower tax bracket later on.
Okay.
But unlike a Roth IRA, your withdrawals in retirement will be taxed.
So there are trade-offs with both.
Right. It really depends on your individual situation and what you think your tax situation will be in the future.
So figuring out which one's right for you is important, but regardless of which account you choose, Yang has a simple formula for figuring out how much you need to invest to reach your dividend income goal.
Yeah, he calls it the formula for freedom. And it is super straightforward. Dividend income divided by dividend yield equals the amount needed.
I like that.
So let's say you want $50,000 per year in dividends, and you're targeting a 3% yield. You would need about $1.67 million invested.
Wow, okay. That really puts it into perspective. But it's important to remember, this is just a starting point, right?
Absolutely, this formula. It's helpful for getting a general idea, but it's not a replacement for personalized calculations and a comprehensive financial plan. You also have to think about your risk tolerance, your time horizon, your overall financial goals.
It's like having a roadmap. It
Exactly.
gives you the general direction. But you might need to adjust your route depending on traffic or weather or any unexpected detours along the way.
I like that analogy. And when it comes to navigating the world of finance, it's crucial to have the right tools and knowledge. Yang really stresses that. You need to think critically and do your own research before you take any investment advice, especially advice you find online.
That's a great point. It's easy to get caught up in the hype or follow someone else's strategy without really thinking.
Right. What works for one person might not work for another. Your financial journey is unique, and your investment strategy should reflect that.
So we've covered a lot today. We talked about dividend yields and dividend aristocrats and how taxes play a role and those tax-advantaged accounts like Roth IRAs.
Yep. It's a lot to take in.
It is, but it's all essential stuff if you're serious about building passive income streams.
And even though it might seem overwhelming at first, it's really about taking it step by step. You start with the basics, build a solid foundation, and then gradually expand your knowledge and refine your approach over time.
This deep dive has been like getting a crash course in dividend investing. What are your biggest takeaways? What questions do you have about how this all fits in with your own financial goals?
You know what really stands out to me is that building a solid dividend income, it's not about finding some magic stock or secret formula. It's about creating a plan, a personalized plan. That takes into account your individual situation, your risk tolerance, and your long-term goals.
Yeah, that's so important. It's easy to get caught up in chasing those high yields, but like we saw with AT&T, a high dividend doesn't always mean it's a good investment.
Exactly.
You have to look deeper. That's why Yang emphasizes research and due diligence before you jump into any investment, especially one with a big dividend. Take the time to understand the company, look at their financials, their growth potential, their history of dividend payments. Like a financial detective,
Right.
gathering all the clues before making a decision. And speaking of making decisions, that formula for freedom that Yang talks about, dividend income divided by dividend yield, that's a really useful tool for visualizing how much you actually need to invest.
Yeah, it gives you a good starting point. But remember, it's just one piece of the puzzle.
Right.
You've also got to consider taxes and the benefits of those tax-advantaged accounts, like the Roth IRAs we discussed.
And don't forget about diversification. It's not just about finding that one perfect stock.
Right, it's about building a well-rounded portfolio.
A portfolio that aligns with your goals.
Exactly.
Yeah.
And building that kind of portfolio, it takes time. It takes patience. This isn't a get-rich-quick scheme. It's a long-term commitment.
A long-term commitment to saving and investing and learning.
Exactly.
It's like planting a seed and nurturing it over time. It starts small, but with consistent care and attention, it can grow into something strong and fruitful,
I love that.
providing you with passive income for years to come.
That's like a great way to put it.
This deep dive was just the beginning. We've explored the ins and outs of dividend investing, the potential pitfalls, and some really powerful strategies. Now it's your turn. Take this knowledge, dig deeper, and create your own path to a future where passive income helps you achieve your dreams and passions. Keep learning, keep exploring, and keep that financial freedom fire burning.